What is accounting? Let's break it down and understand the basics of accounting clearly and simply.
Accounting is the process of recording, classifying, summarizing, and interpreting financial transactions. It's an essential function for businesses to track their income, expenses, and overall financial health. By accurately recording every financial transaction, businesses can ensure transparency and avoid errors. These records are then classified into different categories, such as assets, liabilities, equity, revenue, and expenses. Once classified, the data is summarized into financial statements like the balance sheet and income statement. These reports provide a clear picture of the business's performance, allowing decision-makers to evaluate profitability, manage costs, and plan for the future. Finally, interpreting this data helps businesses make strategic decisions, from expanding operations to reducing costs, and ensures they comply with financial regulations and legal requirements.
Accounting equation. Assets is equal to liabilities plus equity. For example, let's assume you buy a car for your business that costs rupees 4 lakhs. You pay rupees 1 lakh as a down payment, and the remaining rupees 3 lakhs taken as a loan. Here the car is considered an asset because it adds value to your business. The loan is a liability because it is money you owe. And the rupees 1 lakh you paid from your pocket is equity because it is your own contribution. Let's see the double entry system in action. This system is simple for every transaction. There are 2 entries, a debit and a credit. These entries keep the accounting equation balanced, assets equal to liabilities plus equity. For example, imagine you buy office furniture for rupees 1,000. The furniture account is debited because your assets increase. The cash account is credited because your cash decrease. This way, the double entry system helps you track every transaction accurately and keeps your financial records organized. Let's look at the revenue and expenses, the 2 key elements of every business's financial health. What is revenue? Revenue is the money a business earns from its activities like selling products or services. It's also called income or sales. What are expenses? Expenses are the costs a business incurs to run its operations and earn revenue. For example, let's take a bakery. The bakery earns 5,000 rupees by selling cakes, that's its revenue. The bakery spends 2,000 rupees on ingredients and 1,000 rupees on electricity, these are its expenses. Now, the difference between revenue and expenses is the profit. In this case, 5,000 rupees minus 3,000 rupees equals 2,000 rupees profit. It's that simple. Let's talk about the chart of accounts. The chart of accounts is a list of all the accounts a business uses to keep track of its financial transactions. Here are the main categories. Assets, things the business owns, like cash and equipment. Liabilities, money the business owes, like loans or bills. Equity, the owner's investment in the business. Revenue, money earned from sales. Expenses, money spent to run the business, like rent or salaries. For example, a bakery's COA might include cash and inventory as assets, cake sales as revenue, and ingredient costs as expenses. The chart of accounts helps keep everything organized and makes managing finances easier. Let's look at the importance of accounting in just 1 minute. Accounting is essential because it helps businesses track performance. It shows how well the business is doing by recording income and expenses. Stay compliant with laws. It ensures the business follows tax and legal requirements by keeping accurate records. Make better decisions with clear financial data. Businesses can plan for growth and manage resources effectively. In short, accounting isn't just about numbers, it's about making smarter decisions for success. Accounts helps keep everything organized and makes managing finances easier. Today we covered the definition of accounting, accounting equation, the double entry system, revenue versus expenses, chart of accounting, importance of accounting. If you found this helpful, don't forget to like, share, and subscribe for more amazing content on accounting and finance.